Good day, traders. It's Friday, September 30th. This is Alan Hong, market analyst of GKFXPrime. So we're going to share my daily analysis through this video. First of all, let's review the major market movements. So first instruments referring here is the dollar index in 4-hour chart. The US dollar index was fell against a basket of major currency on Thursday, which traded 0.29% to 93, as weakness in the labor market was offset the data showing US economy grew faster than expected in the second quarters. According to the Commerce Department of the United States, say in its third estimates on Thursday, gross domestic product was increased at a 3.1% annual rate in the April to June period, and this was beating a previous estimate of 3%. So fresh on the heels of the upbeat economic growth data, a labor market report showed the number of Americans filing for unemployment benefits rose more than expected last week. So this was according to the US Department of Labor, reported Thursday that initial jobless claim was increased 12,000 to a seasonally adjusted 272,000 for the week ended September 23. So this was missing focus of a 10,000 increase. The slump in the dollar comes after it hit 1-month highs on renewed hopes of tax reforms in the wake of the President Donald Trump's speech on Wednesday, in which the president hailed a tax reform plan released by his administration as a once-in-a-generation opportunity. So the duel of reports came just hours ahead of speeches by various officials, Stanley Fischel and Estelle George, as the latter said continued interest rate increase are the best way to ensure the current economic recovery remains on track. While EUR-USD was gained some ground, rose 0.3% to traded around 1.1781, just off the previous session's 1-month lows of 1.1719. So political uncertainty persisted in Germany, but Chancellor Angela Merkel seemed closer to forming a government after Wolfgang Schäuble decided to become president of the parliament, allowing another party to take the finance ministry. Meanwhile, GBP/USD was rose higher, up 0.34% to 1.33429 on Thursday, after Bank of England Governor Mark Carney said in a speech on Thursday that Britain's economic prosperity will depend on the deal made to leave the European Union. So Carney added that stable inflation is the best contribution that monetary policy can make to the public good. The safe haven Japanese yen was strengthened, with USD JPY down 0.1% at 112.73 against the US dollars. So earlier Thursday, Bank of Japan Governor Haruhiko Kuroda said in a speech that the country's economic expansion is highly sustainable and that he expects inflation to accelerate towards the central bank's 2% target. The Kiwi was held steady on Thursday, up 0.21% to 0.7214. Following a widely expected move, the Reserve Bank of New Zealand was left interest rates unchanged at 1.75% at the conclusion of its policy meeting on Thursday. So commenting on the decisions, the central bank said that it doesn't expect to raise interest rates for some time as the economic growth outlook weakens and inflation slowed. Having a tad in commodities markets, the gold price was roughly unchanged on Thursday, rose by $2.61 or 0.2% to traded around $1,290.40 troy ounce, as the dollar weakness kept downside momentum, but the precious metal remained under pressures amid investors' expectations of a year-end interest rate hikes. So gold price attempted to halt the recent slump, which has seen the precious metal dip below $1,300 a troy ounce, was supported by a dip in the dollar, which followed a pair of mixed economic reports. So a jump in investors' expectations for December rate, however, is expected to weigh on upside momentum in gold prices. Gold price is sensitive to move higher in both bond yields and the US dollars, and a stronger dollar makes gold more expensive for holders of foreign currencies, while a rise in US rates leaves the opportunity cost of holding non-yielding assets such as bullion. And the oil price was at the lower on Thursday, fell 1.1% to settle at $51.56 a barrel, as traders unwound some of their bullish bets on crude, but sentiment on oil remained positive following inventory data on Wednesday, showing a surprise draw in crude oil supplies. So crude oil prices fell as investors appeared to take profit on the recent rally, which has seen oil prices hit multi-month highs on expectation that higher global demand would nudge the market closer toward rebalancing. So geopolitical tensions, meanwhile, limited the downside momentum as Turkey vowed to deal only with the Iraqi government on crude oil exports after Iraq's Kurdistan voted overwhelmingly in favor of independence earlier this week. So the pipeline linking northern Iraq to the Turkish port of Ceyhan carries 500,000 to 600,000 barrels of crude per day. So crude oil prices are on track, extended their weekly winning streaks to 4 weeks following strong gains earlier this week, and on the back of data showing weekly crude exports jumped to their highest on records, while refinery activity shows signs of stabilizing. So according to the Energy Information Administration's reported Wednesday, inventories of US crude was fell by roughly 1.9 million barrels in the week ended September 22, which was confounding the expectations of a rise in 3.4 million barrels. So the recent uptick in US oil prices above $50 a barrel has spurred drilling activity, however, raising investors' expectations of an uptick in shale output, which could weigh on upside momentum. So Baker Hughes on Friday will provide investors with his weekly update on the number of US rigs drillings for oil. And now let's review the highlighted economic data and events on Thursday, okay, as well as the focus data for today, Friday. Alright, so yesterday, New Zealand has decided its interest rate decisions at 1.75%, which remain at the record low. So besides of that, United States has released its second quarter growth with surprisingly better than the expectations of 3% with 3.1% growth. As besides of that, United States has released its employment data with the initial jobless claims show a result at 272,000, slightly higher than the expectation of 270. Right, so as for today, we got a series of data that we're going to be released by the Germans as well as the United Kingdoms. Okay, so the last data tonight will be the US Baker Hughes oil rig count, which expected to bring the indications for the global supply level. Its technical analysis sessions, first instruments were referring to the Great British Pounds against the US dollar. So the sterling rose higher on Thursday after Bank of England Governor Mark Carney said in a speech on Thursday that Britain's economic prosperity will depend on a deal made to leave the European Union. So the parent GBP/USD was traded a tad below the resistance level of 1.344, but it is remained in an uptrend structure. The both moving average line in 4-hourly chart was formed a death cross and pointing downwards, signaled to experience a further retracement. So closing below the support level at 1.331, is suggesting for further downsides, and on the upside, the nearest resistance level still refer to 1.344. While United Kingdom is due to release its second quarter growth data later today during the European trading hours. Additional, with the Bank of England Governor will deliver his speech at 10:45 tonight in Malaysian time, and it is expected to bring higher volatility to the sterling. The single currencies must gain some ground following a sharp drop lately, pressured by the political uncertainty persisted in Germany, but Chancellor Angela Merkel seemed closer to forming a government after Wolfgang Schäuble decided to become president of the parliament and allowing another party to take the finance ministry. So the pair EUR/USD was traded below the resistance level of 1.18 and remained its downtrend. So referring to the movement, both movement lines in show in the MACD indicator, which pointing upwards, so closing above 1.181 with suggesting to experience a short retracement, then we could refer to the next resistance level at 1.185. And on the downside, only with a closure below previous lows or the support level at 1.171 will open up a door for further bearish. So the next support level could refer to 1.16 as its long-term target. and investors will eyes on the German's employment data and the speech which due to delivered by the European Central Bank President Mario Draghi later to date in order to gauge the economic strength of the European Union. The Kiwi has held steady on Thursday following a widely expected move, and the Reserve Bank of New Zealand left interest rates unchanged at 1.75% at the conclusion of its policy meeting on Thursday. So the parent ZK-USD was held steady below the resistance level of 0.723, but it remained in a downtrend structures. So closing above 0.724 will provide signals to experience a short retracement and probably to move higher towards the next resistance level at 0.729. On the downside, we could look forward for a closure below 0.713 for continuations of downtrend. And the AUD was rejected to fall through the support level of 0.782 and traded slightly above it. So this was a signal to be traded ranging in short term between 0.782 and 0.793. With a closure below 0.781, we're suggesting for further retracement and fall towards the next support level at 0.773. On the upside, the first resistance level comes in at 0.793. The safe haven Japanese yen was strengthened up against the dollar on Thursday, following Bank of Japan Governor Haruhiko Kuroda said in a speech earlier Thursday that the country's economic expansion is highly sustainable and that he expects inflation to accelerate towards the central bank 2% target. So the pair USD JPY was gained the momentum soon after it touched the fast-moving average lines, and the pair remained traded in an uptrend structures. Thus, a closure above 113.3 will provide a signal for continuations of uptrends. Then we could refer to next resistance level at 114. On the downside, the Fibonacci retracement level of 23.6 or 111.84 is taken as its retracement rehold. So falling through this level might lead to retrace more and fall towards the next support level at 111. Commodities markets, the gold price were roughly unchanged on Thursday as dollar weakness kept downside momentum, but the precious metal remained under pressures amid investors' expectations of a yield and interest rate hikes. So the precious metal traded slightly above the Fibonacci retracement level of 50 or $1,281. And falling through this level will be a signal to enter downtrends and fall further towards the next support level at $1,263 a troy ounce. On the upside, the first resistance level we can refer to $1,230 a troy ounce. As for the oil price, with the West Texas Intermediate crude price settled lower on Thursday as traders unwound some of their bullish bets on crude, but sentiment on oil will remain positive following inventory data on Wednesday showing a surprise draw in crude oil supplies. So the WTI price was retreated from the previous high or the resistance level of $52.80 a barrel, closing below the support level of $51.10, both suggesting to experience a short retracement and fall further towards the next support level at $50.10. So on the upside, only with a closure above the previous high at $52.80 will open up a door for further bullish, and the next resistance level we could refer to $53.70. While US Baker Hughes on Friday will provide investors with its weekly updates on the number of US rigs drilling for oil. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.